Okay, Thailand now proposes tax exemption to repatriate 2 trillion baht in overseas assets. This came out in IMA newsletter, and they were talking about here that the Thai tax proposal lets wealthy residents bring foreign earnings home tax free if repatriated within 2 years of generation. So this looks like it's going to be they're trying to bring back some of these tax exemptions, and the reason why is there were so many people complaining, and there were a lot of people leaving the country, and then also they found out the tax revenue plummeted. Now, Thailand's revenue department has proposed amending ministerial regulations to offer tax exemptions on foreign source income targeting over 2 trillion baht, which is 58.8 billion US dollars in overseas Thai investments. Now, the proposal allows income earned and repatriated income within 2 years to be exempt from personal income tax, extending similar benefits already available to certain long-term resident visa holders. Now, the Revenue Department collected 1,138,182 million US dollars, which is roughly 38.5 billion baht in the first 7 months of the current fiscal year. This was from October 2024 to April 2025. Now, this was exceeding last year's figures. Now, however, the department anticipate a decline between May and July, with year-end corporate income tax filings expected to fall short by over 15 billion baht, which is roughly 441 million US dollars. So they're finding out this was a huge mistake they made, and now they're trying to get a lot of people back in Thailand and start collecting more tax dollars. But the government has set a target of 2.4 trillion baht, which is 70.6 million US dollars for fiscal year 2026, an increase of over 100 billion baht, which is 2.9 billion US dollars from 2025's target. Now the fiscal policy year earned estimated a potential of 36 billion baht, which is 1.1 billion US dollars shortfall for the fiscal year. That was for the entire year. Now, to bolster revenue, the Revenue Department plans proactive audits of businesses not currently in the tax system, focusing on restaurants, nightlife revenues, and cash-based trade and pharmacies. The department's also exploring policy adjustments, such as potentially increasing the value-added tax rate from 7%, along with administrative improvements and structural changes for new revenue-generating taxes. Now, the Revenue Department Director General Pinsay Surawati revealed that the department's reviewing changes to rules on foreign income brought into Thailand. The department has identified over 2 trillion baht, which is 58.8 billion US dollars in Thai investments abroad, spanning assets from real estate to stocks, generating hundreds of billions in returns. Now, the proposal represents a shift from the stricter rules Thailand implemented in January 2024. Now, the thing is what they found out is, which everybody knows. I mean, anybody's got a brain will know this. When you start raising taxes, people go somewhere else. So they try to find a way around it. It just doesn't work. Raising taxes is a stupid concept to try to get more revenue. If they're going to do it, they ought to come out with a sales tax. I don't believe in that, but that's a better system than doing it based on remitted income. But again, under the new proposal, Thailand would exempt foreign income generated from 2024 onwards if individuals repatriate it within 2 years or within 2 tax years from its origin. Thailand would tax income brought in after this period normally. For concerns about double taxation, Thailand maintains a tax credit mechanism under its agreements with 61 countries, allowing taxpayers to offset foreign tax paid against their Thai liability. Now, legislation process requirements is what I'm going over with you now. And now the proposal must complete a multi-stage approval process before becoming law. After the principal approval by the Council of Ministers, the Council of Ministers will send the bill to the Office of the Council of State for technical examination by specialized law committees. Now, following examination, the bill returns to the Council of Ministers for final approval on text before introduction to the Assembly, the National Assembly, and then the National Assembly will consider the bill through 3 readings according to Constitutional Convention. Upon National Assembly consent, the National Assembly will submit the bill to the King for royal signature and publication in the Government Gazette. Now, Penn Say confirmed that the process will involve cabinet approval and a review by the Council of State before becoming law. Officials are they're in the process now of finalizing the exact legal mechanism, either a royal decree or a ministerial regulation. Now, the proposed tax exemption primarily targets wealthy tax nationals and tax residents who have moved assets offshore. The policy affects individuals who maintain investments in foreign real estate, international stock portfolios, overseas business ventures, and foreign bank accounts, things like this. Under the current system, Thai tax residents must pay personal income tax on foreign source income when brought into Thailand. The proposed 2-year exemption window allows these individuals to repatriate earnings without any immediate tax consequences, provided they act within the specified time frame. Now, the policy creates a limited time opportunity for wealthy Thais to restructure their international holdings. Those with substantial foreign investments generating regular income streams could potentially bring years of accumulated earnings back to Thailand tax-free, subject to a 2-year rule. Now, however, the exemption only applies to income generated from 2024 onwards. Pre-2024 earnings could face existing tax obligations under previous regulations. The policy also requires that Thailand maintains its tax credit agreements with 61 countries to prevent double taxation revenues. Also, folks, if you can do us a big favor, we don't monetize our channel. It would help out tremendously on the algorithm of our channel. If you like our videos, give us a thumbs up, and also don't forget to hit the subscribe button on the right of your screen. You'll get new videos automatically as they come out. And I would like to hear from you. If you got a question or comment, just put it below. And if you want to get your income taxes literally to zero and how to get a second passport as quick as 4 months to a year, go to our website, www.citizenshipquickly.com, and just ask for some help. Now, again, the policy creates a limited time opportunity for wealthy Thais to restructure their international holdings. Those with substantial foreign investments generating regular income streams could potentially bring years of accumulated earnings back to Thailand tax-free, subject to the 2-year rule. Now, however, the exemption only applies to income generated from 2024 onwards. Pre-2024 earnings could face existing tax obligations under previous regulations. The policy also requires that Thailand maintains its tax credit agreements with 61 countries to prevent double taxation issues. Now, Thailand has been actively courting wealthy individuals through various programs, including the long-term resident visa. Thailand launched in September 2022, which has issued 6,000 visas over 2 years. The government recently eased long-term residency, also called the LTR program, requirements, removing the 80,000 annual income requirement for wealthy global citizens category applicants in January 2025. Now, for LTRs, visa holders, the proposal creates an interesting dynamic. LTR holders in the wealthy investor, wealthy retiree, and work from Thailand professionals categories, they will actually have a real good benefit from this. And the new proposal essentially extends similar benefits to all Thai tax residents, but with a more restrictive 2-year window. Now, the LTR holders may find their existing tax advantages remain more favorable than the general repatriation proposal, particularly for income streams that can be timed for repatriation in subsequent years. Those in the highly skilled professionals category who pay a flat 17% personal income tax rate could personally or potentially benefit from the new exemption for qualifying foreign income. For expatriate tax residents in Thailand, the exemption should apply equally under Thailand's principle of non-discriminatory in tax law, though specific implementation details remain pending final legislation approval. If you want to know more on this, again, folks, go to our website, www.citizenshipquickly.com, and just ask for some help. And again, it would help us out tremendously on our algorithm if you hit the subscribe button at the right of your screen here, and also give us a thumbs up if you like our videos, and pass these videos around to your friends. It would help us out tremendously. And I look forward to talking to you on the next video. Take care.